Accounting Superstars. Welcome to the Accounting Superstar channel. This is Professor Don Bush. I'm so glad you're here. I've been a professor for about 30 years, a CPA for about that long, and I've got great ways to explain accounting. You've come to the right place to learn accounting, folks. So this lesson is designed for your very first accounting class, probably about the sixth week of class. You're probably in about chapter 5, studying retail accounting for retail organizations. So here's what we're going to do today. We've got a trial balance for Fred Snowblower Service. Now, Fred Snowblower Service, this is a real company, but I changed the name to protect the innocent. So here we go. I've got this trial balance, and you probably notice it's got all these symbols on it right here, a green check mark and wrong answer, and it's also in different colors. So the way this is going to work is the colors that are in the pink salmon color we're going to use. The other numbers we're not going to use at all. All right, so I just wanted to point that out. And so what we'll do is we'll calculate our cost of goods sold real quickly. And I've got quite a few videos on how to calculate cost of goods sold, so we'll go over this rapidly. By the way, if I do go too fast, I've got other videos. They're on accountingsuperstars.com. Go to that website, and I've got all my accounting videos listed out by topic, so that way you can watch videos that'll help you out. All right, let's see here. Going down, here we have a multi-step income statement, and that's the focus of this lesson right here. And what I've done is I've broken it up into boxes, because if you break it up into boxes, it's pretty easy. So here we go. Let's get started. So starting at the top here, we've got Fred Snowblower Service, which is a retail repair shop type of business. And we've got a trial balance here, and the trial balance balances. And we've got things like cash and accounts receivable and inventory and you name it. And our first job is to calculate cost of goods sold. So what I'm going to do is I'm going to split the screen, get things set up here. So here we are. We're going to figure out this cost of goods sold right down here in the bottom part, this green part with this guy who doesn't look very happy. So we need, first of all, our beginning inventory, January 1st. Now, when you're using the periodic system, that beginning inventory will be right on the trial balance. It always works that way. So here we go. Let's copy it over. There we go, 6,500, got it from right up here. And then we've got estimated returns inventory. Now we will use that number here later on. Well, we won't actually use that number, but it's related. So I just highlighted it in pink here so it stands out a little bit. So let's go down the page here. We're only using the numbers that are in pink. Now, cost of goods sold. The next thing here is plus purchases. So we find that on the trial balance right here at $230,000. There it is. And then purchase returns allowances. Now, if you notice, the purchases is a debit on the trial balance, and purchase returns allowances is a credit. So this is going to be a negative number. We're going to subtract it away. If you think about it, when we return things that we don't like, that reduces the amount of purchases that we did. And by the way, the word purchases means inventory that we are purchasing that we are going to turn around and sell to our customers. The account purchases does not mean purchasing anything like gas for the company car or whatever. It only means buying items that we are going to turn around and sell to customers. Purchase discounts, it's really smart to take advantage of those discounts, and those discounts reduce the cost of our purchases. So we'll put it here as a negative number. Here we go. And we're going to add freight in. It's like shipping. It's like when you buy something on Amazon.com. When you have to pay shipping, it increases your price. Now, the cost of goods purchased, all we're going to do is total up purchases, purchase returns allowances, purchase discounts, and freight in, and so we'll get a grand total. $220,000 is our net purchases. Inventory available for sale, easy. All we do is take our beginning inventory plus what we purchased, and there you have it, $226,500. Less ending inventory. Now we need to know our ending inventory, and we can get that from the extra information down here. So when you're doing these problems out of your textbook and for your homework, be looking for that. That's your ending inventory. So we have to subtract our ending inventory. And if you're having trouble with this formula, go back and watch the other videos. You can find them on countingsuperstars.com. Go there. There's no charge. It's all free. Cost of goods sold before estimated returns. So all we're going to do is we're going to add up our, let's see here, cost of goods sold before. So what we're doing is taking our inventory available for sale, minus away our ending inventory. I had to think there for a minute what I was doing. All right. And then the increase or decrease in estimated inventory's return. Now, this estimated returns inventory is estimated to increase by $50. Now, what this means is we expect that we're going to have people returning merchandise. It always happens. Sometimes they're unhappy. And that is where I say that it relates to this account right up here. Right now, this estimated returns inventory account is $230, and we expect that it'll increase by another $50. So what this means is that since people are returning things, we didn't really sell them, really, you know. When you look at the big picture, we didn't really sell them. So we're going to decrease our cost of goods sold by that $50. Now at this point, we don't know who is going to return their goods. But we just expect that based on past experience. So I'm going to reduce this cost of goods sold by that $50. That $50 is coming from right there. So our net cost of goods sold, $218,450. All right. So I told you we were going to breeze through this very quickly, and we did. So going down to the multiple step income statement. Multiple step income statement. Here we go. Now, folks, on this multiple step income statement, only two things are going to go on here. Hope you know this by now. Revenue and expenses, nothing else. All right, revenue and expenses. That's it. Don't put anything else on here. So what I mean by don't put anything else on here, do not put cash on your income statement. Do not put accounts receivable. All right. That's not revenue or expenses. That's why I put this little whatever sign it is. And don't use them. All right. But we did use the inventory and estimated returns here. We did use that. So I have that highlighted in pink. So anything that's highlighted in this blue color, don't use. In fact, I made a little sign here. Wrong answer. Don't put these things on there. Don't put payables on your income statement. Don't put retained earnings. I've seen students put everything on the income statement, and obviously they're not listening, all right? You only put two things on there. Revenue and expenses. That's it. Nothing else. So here we go. Usually when these trial balances are done in a appropriate order, usually everything from sales revenue downward goes on the income statement. Usually, but in your textbook, oftentimes they give you the information in a random order. But whenever you're working, it's usually in a nice, consistent order. So sales revenue 602,610. Let's drop that into the first box. If you take it one box at a time, it's easy, folks. And then we're going to subtract away cost of goods sold. Well, we figured out cost of goods sold right up there. It was $218,450. We figured it out a minute ago. So here we go. I'm going to just drop it into place here. There we are. And we have the gross profit. All we do is subtract one from the other. Gross profit is $384,160, a very important number here, folks. So, folks, that's the first box. If you can do these one box at a time, they're easy. It's just super easy. Just break it up. Now, you might say, hey, I thought you said that only revenue and expenses go on the income statement. And that's true. That's it. At this point in your education, that's it. And cost of goods sold, it doesn't say expense, but it's an expense. So things are consistent with what I'm telling you. All right, so sales salary. So down here in the second box, all we're doing is listing the operating expenses. That is it. It is just that easy. So we just work our way down the list here. Here we go. Let me get that. So sales salaries expense, 110. Let's drop that into place. Advertising expense is 45. Got it right up there, 45. Delivery expense, 55, right from there. See, it's easy. It's hard to go wrong unless you're not being careful. And then depreciation for expense for store equipment. Now this is an expense, depreciation expense, and we're going to add up our total selling expenses. And it's really nice to do retail stores in this way because it tells you how much you're spending for marketing and advertising and that kind of thing. And then we have our our administrative expenses. So let's go down the list just a little bit. Office salaries, 50 grand, comes from right up there. There we go. Rent expense, 24,000, right up above. And now let's see here, insurance expense. That's what's coming next. Insurance expense. Total administrative expenses. There we go, 82,000 even. Total operating expenses. So what we're going to do is take our selling expenses and our administrative expenses and we're going to add them together. That's all there is to it. Just that easy. All right. Now the next step here, ladies and gentlemen, we're going to figure out the operating income. And I've got that operating income highlighted in bright yellow. And the reason why is when you want to know the health of a business, the operating income is a key number. That is how the business is doing from doing their job, from doing what they're supposed to do. But in the case of Fred's Snowblower Service, Fred sells snowblowers and he repairs snowblowers. So it's really important to know how well he's doing from those activities. So the way we figure out operating income is we simply take the result of box 1, which is gross profit, and we subtract away the result of box 2. See, it's super easy. And if we do that, we're going to get 77,160. Now I've got a little green check mark and it's highlighted in yellow just to make it clear this is a really important number. All right. In fact, whenever I analyze companies for investment, that is one of the very first things I look at is their operating income. Are they making money from doing what they're supposed to be doing? Now, a lot of times with companies, there's some odd things, miscellaneous things that aren't directly related to their operations. And they go last here. We've got rent revenue. Now, Fred's not in the business of renting out things. That's not what he does. But he did rent something out, and it was for a minor amount of money. It wasn't for a lot, and it turned out to be for $5,000. And I'm getting that right off the trial balance right here. So I'm going to put that $5,000 right down there. And then he had some interest expense for some money that he borrowed here, and it turned out to be $4,200. So I'm going to put that right here. There we go. Now we have to be careful here, and I know I didn't put things as negative numbers and positive numbers, that kind of thing, but we just have to be careful and know that rent revenue, that's more or less money coming in, and interest expense, that's money going out. So we're going to net the two together here essentially. So what we're going to do to find the final net income here, we're going to take the 77,160, we're going to add the rent revenue 5,000, and then we're going to subtract the interest expense. So you got to be thinking about what you're doing. Comes to 77,960, and so we are done, folks. So if this lesson helped you out, let me know. Put in some comments here. Let me know what's giving you a bad time, and I'll make a video about it, and I'll help you guys out. Also, hit that like button, the subscribe button. That way YouTube will know that these videos are helpful, and more people will be able to watch them. And lastly, go to academysuperstars.com and look at all the videos that I have there. I've got them all listed out by topic. So a lot of help here for you guys. So until